Good morning. The bulls staged a stunning comeback with an approximately 2% rally in the main indices. The Irish bailout news coupled with positive FII data helped lift the gloom mood amid concerns about simmering political contention. The Supreme Court will hear the PM's affidavit on the 2G spectrum case today. The all-party meet failed to break the logjam in Parliament linked to the highly controversial issue. The opening today would not be as good as it was yesterday. In fact, there could be some cooling in line with the other world markets. The Japanese markets are shut for a holiday. The China market is down sharply as authorities struggle to contain inflation. Stocks in Hong Kong and Sydney are also trading in the red. US blue chip stocks fell on reports of insider trading probe into Goldman Sachs and a couple of hedge funds. European stocks slid amid worries that the Irish rescue may not prevent further spread of the debt contagion to other Eurozone nations like Portugal and Spain. The key Indian stock indices are likely to remain choppy and range-bound ahead of the FNO expiry on Thursday. But do not get carried away by any rebound as the undertone is a little fragile given the anxiety surrounding the political developments and the external tensions. Talking of politics, in Ireland, one of the partners in the ruling coalition has called for an election. In fact, Brian Cohen, the embattled Prime Minister of Ireland, said that he would dissolve his government and hold a new election once a new national budget is enacted. He is scheduled to present a proposed budget on the 7th of December. The euro slipped against the dollar yesterday, snapping a 4-day rally as investors questioned whether international efforts to halt a full-blown eurozone debt crisis are enough. Also, Moody's warned of a multi-notch downgrade of Ireland's credit ratings, notwithstanding the weekend request for a bailout. In Asia, Thailand technically fell into recession in the third quarter of calendar year 2010 and the Malaysian economy too slowed in the July to September quarter. China is battling 2-year high inflation despite raising the reserve ratio for banks last Friday. Last week reports showed a slowdown in Taiwan and in Singapore. M&M has signed the deal to acquire SsangYong Motors for $462.3 million. Aegis Logistics Limited and Gujarat Pipavav Port Limited are announcing a major development impacting the future growth of both the companies later today. Airlines reported a passenger growth of 18.3% in October to 4.6 million. The Drugs Controller General of India has suspended the sale of anti-obesity drugs sibutramine and R-sibutramine in the country as continued use of both drugs could lead to heart attack. The government is likely to decontrol the retail price of urea and shift it to the nutrient-based subsidy regime by 2011-12. Navi Mumbai Airport gets a red nod from the Environment Ministry but with riders. Tata Chemicals announced the launch of Paris Formula, the country's first ever customized fertilizer product specifically targeted at farmers in western central Uttar Pradesh. The government has approved stock split of ONGC share into two, making it affordable for investors ahead of its FPO. Jubilant Energy plans to raise $85 million through institutional placement and plans to get listed on the London Stock Exchange on the 24th of November. The initial public offer of state-owned Punjab and Sindh Bank will hit the market early next month. The follow-on public offer of Shipping Corporation of India for 13 billion rupees would come out on the 30th of November. Religare Capital Markets, the investment banking arm of Religare Enterprises, has acquired the UK operations of Bernard Jacobs Mellett for an estimated 40 to 50 million US dollars. Moving on to the recommendations, the technical calls are: a buy on Yes Bank. We recommend traders to buy the stock above levels of rupees 332 for a target price of rupees 347 and the stop loss is to be placed at rupees 325. And a buy on Allahabad Bank. We advise buying the stock above levels of rupees 259 with the stop loss to be maintained at rupees 254 for a target price of rupees 269. The derivative strategies are long NTPC November future in the range of rupees 182.5 to 183.5 for a target price of rupees 192.5 and a stop loss is to be placed at rupees 177.5. And long Punjab Lloyd November future in the range of rupees 114 to rupees 115 for a target price of rupees 124 and a stop loss is to be placed at rupees 109. Thank you and have a great day ahead.